Respected judges and fellow audience, we, Team 165, will present to you our credit research report on Bharti Airtel as a part of CRC Challenge 2019. So this is the presentation overview. We'll start with the company overview, take you through the financial analysis, liquidity analysis and technical analysis, and then conclude our take on the credit positioning of Bharti Airtel. Quickly taking you through the timeline. 1995 it was established as the public limited company. 2011 it became the largest telecom operator. 2015 it gave a promise to become the most loved brand. 2018 we can see the results. Over 413 million customers at the end of March 2018. Business description. So it is the legal global telecommunication company in Asia as well as Africa. In India, it was the first open network, building a truly transparent network. And in 2017, it was ranked amongst the top 100 firms by Forbes. Coming to the company's products and services. So, mobile services, Airtel businesses, telemedia services and digital TV services. From this, we can conclude that it has a robust and a diversified portfolio of services. Industry overview and competitive positioning. So there are four major players: Vodafone Idea, Bharti Airtel, Reliance Jio, BSNL and MTN. For comparison, we have taken Vodafone Idea, taking into account coverage, taking into account market share. But Reliance Jio can't be considered as a direct comparable, being a disruptor and being a recent competitor. BSNL and MTN also can't be directly taken as a comparable because it is a state player. So why Airtel? Airtel was the one who could actually withstand the onslaught of Jio business, and besides its network advantage, it has huge advantages of geographical diversification and operational diversification. Global presence, so mainly in Asia and Africa, India, Bangladesh, Sri Lanka in Asia, and in Africa it is Kenya. Competitive analysis. So we have calculated the HHR index. We can see it is 4133, which is greater than 2500, which shows that competition is low. But given that Jio was a disruptor and given the current taste and preference of consumer, we conclude that there is huge competition in the market, and this is further substantiated by bottom line figures. We can see that all the other companies as well as Bharti Airtel has suffered losses due to market cannibalization by Jio. So their bottom line have really suffered. Corporate governance. So it is headed by Mrs. Sunil Bharti Mittal, and it has a board of directors of 11 members with a quite good number of members as independent directors. It has board committees such as audit committee, HR and nomination committee, CSR committee. And code of conduct, it is complied with the regulation 17 of the Companies Act 2013, and its disclosure policies also has like whistleblower, insider trading. So from this we can conclude that Bharti Airtel has a credible corporate governance structure. We can also substantiate this by CRISIL ratings. CRISIL rating has given level 1 for corporate governance practices to Bharti Airtel. So the next slides will be taken up by my team members.
Okay, coming to the shareholding pattern of the company, we have seen almost 67% is owned by the promoter group. This shows the trust of the promoter group in the company, and this is very important as far as credit analysis is concerned. And coming to the capital structure and cost of capital, the capital structure, 60% of the capital structure is the equity part, and the other 40% is divided between short-term and long-term debt in the ratio, like more than 3 times of the short term is the long term debt. Now coming to the cost of capital, which actually gives the perception of any equity investor or of lender as far as the company is concerned. So we have seen the cost of equity is almost 11.6 and that of debt is 7.2, which is very competitive as far as the industry is concerned. And as of now, the total cost of capital is 9.8, which is okay as far as the industry is concerned. And if you see the trend analysis of cost of capital, it has gone lower, and in the last 3-4 years it had went up. This is mainly because of the capital intensive industry and the perception of the investors in the industry, and even the advent of competitors like Jio has influenced this a lot. So coming to the liquidity ratio analysis, which is very important for the credit worthiness of the company, we have given the cash ratio, quick ratio and current ratio trends compared with the industry also. So cash ratio and quick ratio is showing an upward trend, but even though it is having a huge gap compared to the competitor, but the current ratio is giving a downward trend, this actually puts a big question mark of the credit worthiness of the company. So what can be the reason? The main reason can be the decreased ARPU, the average revenue per user, or can be the advent of the disruptor geo. So we can look into that. So before that, we are going to further liquidity ratios, and we are taking the debt ratios with the equity, with the total asset, and at the end Altman set score. So compared to the industry, all these ratios are better for the company. But coming to the Altman set score, which actually takes a lot of ratios, all these ratios to calculate the credit worthiness of a company. And here the value is almost 1.7, which is way less than 3, which puts a huge question mark, big question mark on the credit worthiness of the company, because anywhere it is less than 3 means it's not that good scenario. So, along with our independent study, we have taken the credit reports given by the major credit rating agencies such as ICRA or CRISIL, and what is their trend according to the as far as the company is concerned. So, we can see they have actually downgraded most of the credit ratings for the long-term and working capital loans as far as concerned, and for commercial paper, it is reaffirmed only. Mainly because commercial paper is short-term and others are long-term in nature. So that means even the major credit rating agencies are putting a question mark on the long-term credit worthiness of the company. And what are the reasons? What are the reasons for why? What are the negative reasons for the lowering of credit rating, and what can be the positive reasons why Airtel is still sustaining in this competitive scenario? So negative reasons are mainly the capital-intensive industry structure, and if you take the disruptors advent like Jio and all, and the average revenue per user has gone lower like anything. And if you take the positive reason, the main positive reason can be the well-diversified portfolio of Airtel compared to any other player. So, a well-diversified portfolio and African presence where they did an IPO of $1.25 billion, which was huge success also. And coming to the key rating drivers that I have already discussed, and here we have put it properly. So these are established market position in Indian, Asian and African countries, diversified portfolio, improved African performance and persisting competitive intensity in the industry. These are negative drivers and other pressures. And coming to the debt analysis, so these are the debt values, and you can see it is increasing over the years, and we have calculated the industry coverage ratio and total debt to EBIT, and both are showing a negative trend. So this is putting a question mark on the capacity of Airtel to pay back the debts, but still this is better than the industry average. Rest will be taken by my teammates.
So moving on to the key assumptions which we have taken for our financial and credit analysis, starting with the Indian economy. It is supposed to grow at 7.5% in fiscal 2019 and 7.8% into fiscal 2020. Talking about the African operations, which will have a patchy growth rate of about 3 to 4%. The second assumptions which we have taken is the company's revenue growth should stabilize at around 8 to 10%, wherein the major revenue will come from wireless and non-wireless operations in India as well as in Africa. Talking about our third assumptions, which is pertaining to the acquisitions, we see that we expect synergies from Telenor and Teletele acquisitions to kick in from 2020 only. Talking about our fourth assumptions, we see that the company's India reported EBITDA margin should stabilize at around 26 to 28%, which is down from 32.6% in fiscal 2018. Whereas we see that African operations EBITDA margin should strengthen to 40%, which is more than 36% in fiscal 2018. Moving on to the financial analysis, we have taken 4 key financial important ratios, wherein we have seen that the operating margin is depleting, the return on assets is negative, This is due to the competitive pricing, the emergence of Jio, and the Vodafone Idea merger, which has led Bharti Airtel to incur extreme, huge spectrum charges on laying of the cables. Moving on to the return on invested capital and asset turnover ratio, it has also decreased, which is mainly due to the increasing capital investments and competitive pricing after Jio's disruption. Moving on to the investment risk. The investment risk is categorized into risk to the business and risk to the investors. Talking about risk to business first, the financial risk is composed of foreign currency risk, wherein the foreign currency risk mainly arises due to all the invoicing, capital and operating expenditure invoicing done in foreign currency. Hence, Airtel has specifically renegotiated their contracts, foreign currency contracts, to convert them into local currency, hence reducing their foreign currency risk. Talking about interest rate risk, the company has no significant exposure in floating rate interest bearing assets or significant long-term fixed interest rate bearing assets. Hence, company has reduced its interest rate risk considerably. Also, it has spread its debt profile locally as well as in overseas geographies to create a natural hedge. Talking about the price risk, which arises mainly due to its investment in short-term debts, liquid funds, and derivatives. Hence, the company adopts its mark-to-market positioning, affordability, and profitability strategy to maintain the price risk. Talking about credit risk, which arises due to the failure of its payment of its obligation by its counterparty or the credit deterioration of the counterparty. Hence, companies has adopted a robust mechanism to assess the credit risk of its counterparty as well. Talking about the liquidity risk further, this arises due to failure of its payment of its obligation when the obligation is due by the company itself. Hence, the company adopts a robust cash management system wherein they have maintained bilateral sources of financing, debt financing, and as well as equity financing. The risk to the investor is, as the environment is competitive, the government regulations keep on changing, there is hawkish investing behavior, industry slowdown, and bearish indicators have led to a decrease in the equity value in the stock market, as well as has led to the erosion of their market capitalization in crores. Hence, this is resulting in higher churn rates and the lower ARPU, that is average revenue per user. Talking about the credit risk rationale, which has been categorized into business risk as well as the financial risk, we associate our business risk to be satisfactory owing to the competitive positioning which it has in the market. Post Idea Vodafone merger, the revenue market share has dipped down to the second position at 31.7%, whereas the Vodafone Idea Limited merger revenue market share is 34.7%. Hence, we see that although the revenue market share has decreased to slip to second position, but it is still significant. Talking about the resilient market share, still after adopting competitive pricing by Jio, the Airtel's top line is fundamentally strong. Talking about the strong African market, wherein we have already discussed, it has trended to about 37.1% as compared to 23.8% in fiscal 2018. Now coming forward to the financial risk. Financial risk is constrained to the lower financial projections owing to the increasing sharp depreciation of rupee against US dollar and the company's operational inefficiencies due to the competitive pricing. Hence, we see that the company's financial projections are not that strong enough. Talking about the emerging stability, the stability is achieved at around 1 to 3% as discussed, written here, 1.7% to 2.3%. Hence, it has stabilized at around, the top line has stabilized at around 2.3%. Talking about the IPO in African market, we see that the expecting Bharti Airtel to have a controlling shareholding after the strategic sale and IPO for the corresponding unit as well. So, we have come to the business, we have associated our business risk to be significant and financial risk to be significant. Talking about the overall risk, we see that the degree of operating leverages, degree of financial leverages, which is bolstering our viewpoint, we see that the operating leverages are deteriorating, it is negative for a year, and financial leverage is increasing over the years, and it is negative for the fiscal 2018. Hence, we see that the combined leverage, which should decrease for a company, it is increasing here. Hence, the company is having a considerable risk. Talking about the technical analysis, which shows that the momentum of a stock, the investor's confidence is also losing as all the indicators are bearish. Talking about Bollinger Bands, they show no sign of squeezing in, wherein there could be a price volatility and investors could invest and earn hefty profits. We see moving average convergence divergence lines, which shows that the MACD line is below the signal line, which is a bearish crossover. Now, relative strength index also shows no signal as it is around 50 RSI. Talking about the moving averages, we see that the 200-day moving average is much above the 50-day moving averages, which shows that the company's previous year performance was better and the investors' confidence last year was better as compared to this year. Talking about the Fibonacci series, the first resistance and second resistance are set at a lower level, which is again a sign of a bearish indicator. Hence, as my friend has already discussed, the odds on Z-score is dipping over the time. We see that the credit risk is increasing. These are the reasons which we have associated for a business risk to be satisfactory and credit risk to be significant. Thank you.